Inflation, not just for pool toys anymore. Hi, and welcome to another episode of Poor vs. Standard. Poor here. As always, we are not financial advisors, so any advice given within this podcast is for entertainment purposes only. Don't sue us. Don't do it. All right, let's dig in. I hope everyone's having a fantastic start to the week. As you can see, we are up approximately $50 on Monday. Woo! Markets were slightly down, pretty much middling ground. Up, down, left, right. There wasn't really much movement. There's the volatility index is still just kind of doing its thing. And as you can see, the portfolio hasn't really changed all that much since the last time we went over it. And we'll talk about some crypto real quick, and then I want to get into something a little more important. Currently, Bitcoin is trading around 42,500. Ethereum's down below 3,000, it's 2950, and Cardano is at 216. You could probably round that up to 217. But yeah, that's everything's looking like it's just hit a downtrend suddenly. Looks like we're down 3 to 5%, depending on the crypto. And that's because China has started to have different brokerages stop service to anyone who used crypto in China. So they're implementing their full-on ban, which I think is okay. I'm not worried about that. Keep selling it so I can buy the dip, because I will keep buying the dip on Bitcoin. I've been through this. When Mt. Gox went down. I went through this in 2017, so I'm not worried. I will continue to buy and average down as long as it goes, because it's one of those rock meet unmovable force kind of things. So it will bounce back, and it will bounce back with a vengeance, and I am very certain of that. I can't give you any guarantees because I'm not a financial advisor, but I am confident in this. What I wanted to talk about today was more of the fact about how we've been told that there's transitory inflation, and it's looking like it's going to be a lot more than just transitory inflation. And I want to give more of a brief discussion as to what inflation actually is and why it sucks and why you should be investing. Because if you don't invest, you're losing money to inflation. And the feds are literally trying to curb inflation to a 2% annual rate. So that means that every year your money loses 2% of its value. Over the course of 10 years, you've lost 20% of any money you've held on to. That value is lost 20% over 10 years. Over 20 years, you've lost 40% of your value. I mean, if you want to include compound, it's even higher than that. So, in the year 2031, your average large cheese pizza will go from being roughly $20 here to, another 20, technically $24. So maybe could be closer to 25 with, compound interest. That's huge. That's massive. That's cost of inflation goods, and I doubt your salaries will keep up with it. That's why you need to be investing in things that will give you 8% plus returns. I mean, I've been a patron of Alpha Investments for some time because he does great videos, great stuff. And I would be remiss if I didn't, diversify into things that are gaining interest in, more than 8% interest sometimes. And that's why I believe I will be kind of future-proofing myself by doing that. You find the stocks you like, you find the ones that are projected to do the excellent growth rates. You throw in some dividend stocks that'll continue to buy, hopefully raise prices, and give you dividends so that it's an average of at least 8%, if not more. And you use those to your advantage so that you can outpace inflation, because you don't want any type of loss of buying power, because the more buying power you lose, the less cushy lifestyle you can live, I guess is the best way I can put that. It's honestly probably going to be more than 2% a year on average. I mean, this year we're already at 5 or 6% inflation, and they're going to start tapering in November, and they'll be done by 2022. The current crisis affecting you all will be the debt ceiling and how these multi-trillion-dollar packages, whether or not they get passed. Depending on what happens with those and the debt ceiling, you will see taxes very differently as from what they are now. You'll see different programs to try and make everyone even on the basis of equity. Now, on its face, that's a noble goal. To have everyone equal is a noble thing, but we're all given an equal chance at birth. You had an equal chance of being born here as you did in Australia, Africa, South America, wherever. You won the lottery by being born in America, because if you're in America, you are richer than 99% of almost everywhere else. You can look it up. It's something like the top 80% of Americans, so the bottom 20 don't include them, but the top 80% of Americans are richer than about 90% of the rest of the world. So you're very wealthy in most countries. So by being born in America, you actually have a leg up on a lot of people around the world. Now, all Americans have equal opportunity to do something with themselves, with their lives. But forcing an equal outcome on people is not the founding principles of America. It's not how America was, created. That's not what America's about. America's about ingenuity. America's about you doing better for yourself, lifting yourself up by your bootstraps in order to do better. So you could be born into poverty, but if you, study hard, go to college, or not even go to college, if you study hard, if you have half a brain and you do a few things, you will statistically not be in the lowest class in America. All you have to do is, I think the three things that they said are graduate high school, not get pregnant, and be employed not get pregnant before during high school. So after high school, have kids all you want. But those three things, and you will not be in the poverty line, pretty much is what they've said. I forget where that study was, but essentially, if you're listening to this, hopefully you're not going to be in the poverty line either, because you're taking the steps to educate yourself on finance, which a lot of American schools do not do, which is a damn shame, and it sucks. But this discussion about how equal outcomes after the fact, that's not what we're founded on, and that's what some of these programs are trying to do, and I don't agree with it, but I'm not the one making the laws. But there are things in these bills coming up that would make it much more difficult for you to move up and advance, because there's things in there that would change how capital gains works for anyone who makes over 400K. It would make it a lot more difficult for you to make over 400K, because you would be taxed at a certain rate, and anything over 400K, you would get taxed at a much higher rate, and it would be very hard for you to keep pace or beat that, tax rate. It just wouldn't happen. So everyone with money will keep their money, and anyone without the money will not be able to break into that echelon, because the deck is stacked. So I'm not here to talk politics. I'm here to talk about the inflation, and what President Biden said out of his own mouth was that he expects the next 10 years, based on the things he wants to pass, he wants America's GDP growth rate to be between 1 and 1.5%, which is abysmal. It is awful. That is not an average GDP for the U.S. for the last, I don't even know how long. I mean, those kinds of numbers are stagflation. You're seeing inflation, and you're going to see stagnation in GDP. And that's not at all anything that we want, because that's going to make it even harder for you to, lift yourself up through investment. It will be tricky to find good deals. It will be harder to do what we do. But we'll cross that bridge when we get there. But the debt ceiling that they're talking about now, depending on what happens with that, could cause taxes, could cause a lot of capital gains taxes and things like that if they don't raise the debt ceiling to try and raise capital to pay off debts. We'll see there when we get there. I don't think that'll happen, but it's something to be aware of. As for inflation, investing is the best way to fight against inflation. I fully believe that. I fully hope that you have, like a retirement account or something with a lot of Vanguard, like VOO, things like that. Just the SPY even. I mean, that's been pounding out 8% plus. I mean, you're like 20% for the last couple of years. So that's all I got to say for you for now. I've been doing daily briefings with the patrons, so hopefully if you're on Patreon, please feel free to, support us. There's a $5 level now. Anything you can do would be great. And we do weekly briefing on Mondays for the $20 patrons, and then every other day I release, stocks I'm looking at and things I'm looking at in the market that day. And actually, I did get a question from one of the patrons about the brokerage I use for crypto, because they were discussing Cardano with me. So I use Coinbase Pro still. I like the fee structure there for the things I do. And you can actually switch, I believe, from Coinbase Pro to Coinbase for no or very little fees. And then you can use Coinbase to put anything that you get into like a cold storage, which would take it offline, so it wouldn't be, it would be impervious to hacking attacks and things like that. It wouldn't be able to be gotten to. A lot of people I know do use Voyager, and they love it. So that's another thing you can do. And I believe they give like interest on their crypto there. It's something to be wary of if you loan out your crypto, though. If things go sideways, it could end badly, but that's neither here nor there. And I actually do use a app called Yoroi, Yoroi, to stake my Cardano. So if you go over there and you find one of the crypto capital venture pools, they do very well by me. It's a CCV, and then there's like CCV 1, 2, and 3. Check him out, and check him out on YouTube. He does a great breakdown analysis of different cryptos, mostly ADA and Bitcoin. But yeah, Crypto Capital Venture, can't speak highly enough of him. He does very good work. But yeah, that answers that. And do look out for the Twitter. You can find us at VS_poor. I do post when I do some different options plays and things like that. And we did discuss the covered calls last time. And honestly, I think covered calls and put selling right now are probably some of the safer plays, honestly. But we'll try and get one of our deep delve. We'll try and do some more deep delve stock stuff. And I've just been really busy between this, some other projects. But I'm still trying to get out the updated options with the YouTube videos. So pay attention and stick around for that, hopefully. And yeah, I just want to thank you all for being here. We appreciate you greatly. And as always, trade well and be safe.